All right, good day. This is Friday, January 24th. I'm going to do a quick recap of Thursday that is complete in one video. And I'm also going to do a recap of Friday's price action and have a general idea of why price moved as it moved and what levels it reacted to. So we have Wednesday closing as an inside candle between this Tuesday's high and its low. And in the smaller time frame, we do have price building a lot of buy side liquidity here. And as the new day opens on Thursday, which is Wednesday PM time, 5 between 5 and 6 p.m. It creates a new day opening gap. It reacts to it, rejects from it, and moves lower. Always keeping in mind the untapped midnight opening range from Wednesday, the untapped new day opening gap, all the liquidity build in. We come in on Thursday, New York AM. But as we come in during AM, let's say we came at around 7 a.m. We observe how London moved and how Asia moved. And what we see is one-sided move lower with a lot of engineered buy-side liquidity. And it's very rare for all sessions to move in one direction, except in conditions where the price is either extremely bullish or extremely bearish. So in order for me to consider New York move lower with London and with Asia, all three at the same direction lower, I would need to confirm a higher time frame bearish scenario, which I cannot do because as we see, price is moving higher. It's not in like here, for example. If we were here breaking structure and expecting lower prices, I would maybe consider New York moving in the same direction lower as London and Asia. But since we're not in such conditions, I can expect New York to move higher and sweep some form of buy side liquidity. Maybe here, maybe here, maybe even getting above previous day's high, which is Wednesday. And we also want to keep in mind that since it's an inside candle, it can whichever direction the next candle goes to, it can expand in that direction. So if it moves higher, we expect price to move higher, expansively large movements. Or if it moves lower, you can expect lower prices. Nonetheless, we go in the smaller time frame. We see how how New York reacts, how London reacts, and how Asia reacts. So we're in the front of the charts at 7:15. We have new day opening gap with Asia simply moving lower. We have some gaps here, bearish order block. We have, let me delineate the sessions. So we have Asia around here, we have London here. And New York over here. So during Asia, we have some 15-minute bearish order block, a gap, moves lower. London consolidates, moving lower. It does open inside this midnight opening range, reacting from its midpoint level, moving higher, then lower, taking sell side over here. In the higher time frame, we want to see where price is right now. Whoops. So we are inside Tuesday's opening range gap over here at this current level. So we can expect this range to hold. this rejection block to reject price here and move higher, or this sell side over here to get taken, and this other rejection block offer rejection. And I want to see signs of liquidity sweep in the smaller time frame or higher time frame, and change in the state of delivery right after with force. So in the smaller time frame, I can consider this a change in the state of delivery, because we have taken sell side over here. We have stopped in a 1 hour rejection block, also, which is now a 15-minute rejection block. This right here, this sell side to here getting taken, change in the state of delivery. I want to consider all gaps from London. So we have, first of all, the midnight opening range gap, which is, let me change its color. This low, and where the high at? Should be right here. So there's a 5-minute gap formed inside of it, which, if we were to consider London, it gets first very much respected, then disrespected, and then acts as resistance. And we can expect resistance from it again in New York. But it's still early. I want to see some more movement. So at this time right now, I have some sweep of liquidity here. Change of state of delivery here. I want to confirm another change of another shift higher, violating or disrespecting this fair value gap. That would definitely make me more bullish, since we're also in the upper quadrant of this midnight opening range. See, we moved to the upper quadrant. Bodies very much respected it to the dot, very algorithmic. So this raises the probability or the mindset of, yes, we might see higher prices. In the 5-minute, we do have 2 inversion fair value gaps coming from this movement lower. One right here, which I hope price doesn't reprice to. I want to see that leave open for more bullishness. And I have this one right here in the 5-minute, which I want to see price respect. In the 15-minute, we calibrated to this one right here. And since we're seeing such large bodies, it's best to refrain from going too deep into the smaller time frame and stay in the higher time frame, since we're having large ranges, and see how price reacts to these higher time frames points of interest, like this inversion fair value gap over here, or this value gap, like regular fair value gap. So price is at 7 a.m. right there. I want to see reaction, support, price move slower. Well, I didn't want to see price come to this inversion here. Right now, I'm still not taking a trade. I'm observing price. It's still too early. We will consider waiting for 9:30. If we don't see strong movement up, we're long-term bullish. We're aiming for buy-side liquidity. London previous session, London liquidity, previous session Asia, maybe a new day opening gap, tapping. So our target is up here. Price disrespects the first 15-minute with bodies closing first one inside, the other one it's body closed inside, but the next one didn't. It closed lower, and it only found support in this 5-minute inversion. Price moves lower in the 15-minute, respected to the bodies. If we were to enter in a trade and be very, very challenging and courageous, we would be placing our stop loss beneath here and take profit first one up here and the second one maybe up here. Up here is a 1 to 3.4, well, let's say 1 to 3 after interest. This is a 1 to 1.4. Not very much worth it for the risk, to be honest. We still want to wait for clear movement. So at this time over here, we are in retracement of this range after change of state of delivery, reacting to inversion fair value gaps, taking smaller time frame sell side, and in the smaller time frame, since price is algorithmic and fractional, we can see the same patterns in the smaller time frame. Sell side liquidity being hunted, manipulation, change of state of delivery, retracement, move higher, retracement, move higher. So that's a sign of fractional, or an example of fractional price algorithmic movements. And right now we see price displacing. We took sell side, we displaced up higher than this, higher than this. Time is 8:40. So what we have left, fair value gap here, fair value gap here, bullish breaker block over here. I'm gonna put a sign there. Possibly change of the state of delivery here as well. We do move higher and close higher. Price finds support here. This time is 8:50. We're coming in New York, closer to New York equities open. So we can possibly expect another manipulation lower during that time, during the first 30 minutes, because we have some sell side here being engineered. It is low probability, but it can still happen. And I would personally prefer to wait for that time rather than take a premature trade right now. And we do wait and see for 9:30. So 9:30 opens right now. Right now. And how does it open? It rips off. So if we were waiting for 9:45, 10 a.m., we would have missed this move. Price only reacted to this breaker block and this bullish order block here in this fair value gap, and simply moved higher. So in this time of the day right now, we would have missed the move. But we don't FOMO in. We don't just long right now thinking, oh, it's going up, I'm gonna miss it. I missed it, I was bullish, I was right for the direction, but I missed the entry, so I'm gonna enter right now and keep moving higher. We don't do that. We want to stay calm, we want to stay professional, we want to take a deep breath through the nose. That's very important. And we do want to just remain calm and look for the next opportunity to come, because it's frankly still early. It's 9:30, it just opened. So price goes to this new day opening gap, takes all this London and Asia buy side liquidity. So in a nutshell, it did fulfill our target, but since we're witnessing this large movement up, we're in between crossroads. We can expect harsh rejection and move lower, or we can expect retracement after the first 30 minutes of opening and even going higher, because we're considering what this is a inside candle, whichever price expands to, because we do now expect large expansive movements after an inside candle. Whichever direction it does so, we want to follow that direction that day and the day to come. So if we're seeing signs of expansion to the upside, we want to respect that and consider that the the hint, let's say, the algorithm gives or the market maker gives for a directional bias. So right now we're calm. We see how price reacts. Does it continue to move higher or does it retrace lower? Right now we have a gap form in the 15 minute. We zoom out. We have this order block right here, this whole thing, and this is a bigger breaker block. It's very unlikely for price to fall down here because in the 15 minute we have this gap being respected through this wick, not even to its midpoint, and this is probably a breakaway gap where price will not return to it anymore. So we expect higher prices for, or higher levels for price to retrace to. So again, we're trying extremely hard to control our emotions at this point right here, and extremely hard to stay calm. Price just rips higher. We're thinking, oh damn, we missed it. If we entered here, we would have taken another 2%. Shut the fuck up, just relax, don't FOMO. Wait for price. See, it retraces so low, so fast. So in this moment right here, there's a rush of emotions to the unexperienced mind or eye, because we have large movement to our directional bias that we missed. Feeling like entering here, price moves so strongly lower, making us feel, oh, so good that we didn't enter. Maybe let me go short. But it's not the right mindset. The right mindset is this is completely normal. Large movement up, large movement down, rebalanced. We're just not used to this large, expansive, immediate movement. So that will naturally invoke emotions, and those emotions, it's best to let them pass and focus in what our analysis says and not what we feel or what this makes us feel in the moment. So analysis, again, directional bias high, expansive day after inside candle high, retracement first to this breaker block and to this big gap right here, and also in the 15 minute should be a gap, definitely a big one, a huge one, maybe in the 1 hour. In the 1 hour we have immediate rebalance. We want to know that level. And we drop again in the 15 minute, immediate rebalance to the dot. 5 minute, we have price finding support there, and now we want to frame an entry. We're in a level where we can expect retracement and we can expect an entry as well. So we can drop in the 1 minute or even the 15 second. We drop into a time frame where we can notice some price action patterns, versus this here you cannot see shit. You cannot take any point of reference here that constitutes a framework of entry characteristics, versus the 15 second or let's say the 30 second. Here we can see more. We have lower low with bodies, high, consolidation, moving higher. So we have already a change of the state of delivery here, but we still want to see price to have a tendency to move higher and build up price action, like here, move lower, then slowly start to move higher, and try to frame our trade inside this range. So time of the day is 10:19 right now, 19. We have a newly formed New York opening range. We have a big gap that we expect price. So rule number 1 is whichever gap that forms in the New York opening range, we want to use that not for an entry, but to validate our entry or our directional bias. Meaning if we're bullish, we want to see this gap get respected. If we're bearish, we want to see it get disrespected. And right now it is getting respected. We have another 5 minute over here that's getting very much respected. But if we have one in the 15 minute, we will consider that. Price forms a fair value gap here, 15 minute. Gets disrespected. So this is 9:45. This is 10:15. So if we're bearish, this fair value gap should only should come up here, then move lower. But instead, what it's doing, it is moving higher. And as it moves higher above it, now this fair value gap turns into an inversion fair value gap, which offers support when price retraces back to it, as it does right here. That's a characteristic of the inversion fair value gap. So we are being supported in the New York opening range gap. We are disrespecting bearish fair value gaps. We have bullish sentiment. You can say, yes, we've come so far. I didn't enter here. Maybe it's too high to enter. It's never too high, my friend. It's never too high, because in the 1 hour, yes, we may have moved a lot, and we are currently right now in this opening in midnight range. And there is a risk indeed that we will simply consolidate in this range. But we can also constitute an entry with a tighter risk and a tighter profit, maybe a 1 to 2, maybe a 1 to 3. Why not? Because this is clearly moving higher. And in the 1 minute, we don't see an entry based on our model, except, well, we do have failure swing, but our model is sweep of liquidity with change of state of delivery. But if we can notice our model, again, in a correlated asset like Ethereum with SMT here, we can still frame an entry based on that SMT. So coming to this comparison chart, well, this is Thursday 10/12. Thursday 10/12. Wait. In the 1 minute. All right. We already have an SMT here. Okay. See, we confirmed SMT. Bitcoin didn't have our model, but Ethereum did do. And as Ethereum breaks this high, it's too late. Bitcoin already has moved. But we don't have... Yeah, so this can be the tricky point where we see Bitcoin moving higher, but Ethereum failing to move after taking the sell side. But the key element here is not to focus in how Ethereum will move after, but just to grab this element of information, which is SMT, and focus then on Bitcoin movement, because that's clearly the strongest asset in the market right now. And as price this week retraces back to this block, you can frame an entry over here. But nonetheless, we technically could have entered here with SMT. But now that we have confirmed higher prices over here, we can frame an entry here as well. So in the 15 minute, we see price 10:30 candle close higher. We can frame now an entry anytime in this retracement lower, so anytime after 10:30. And this happens to be in the between 10 and 11 macro time AM. So as price is at 10:30 up here above this, we see 1035 higher, retracement lower into this gap. See, 5-minute gap. And this should be respected if we're bullish, if he wants to move higher, because we're expecting bigger bullish fair value gap. We're disrespecting bearish gap. We're expecting support in this now turned inversion fair value gap, and we're expecting this fair value gap bullish to get respected. So in the 1 minute, we can definitely enter without hesitation. Also above this block over here, and put stop loss below this wick, because this wick just took this wick's sell side. So if we were to drop below this wick, that would indicate lower prices, change in the state of delivery, and that would just lag us further. So first target, see how we have a very tight stop loss. First target can be the New York opening range high with a 1 to 4. Or if you want to be more, courageous, you can aim for the high of the new day opening gap from Wednesday. Also, we have, don't forget, the new week opening range, which will offer support all week long, as it does here. It's also an element to consider prior. And as we do enter here in the 1 minute, we're entering at 1040. So preferably we want to see the trade exit by 12. We want to see preferably before the 12 p.m. Time, because that's the lunch time and price tends to get very choppy and usually moves against the directional bias or the algorithmic movements. So we observe, we're very patient. We don't feel like, this move lower is very bearish, we will continue bearish. We just, based on this experience, this hindsight, this analysis from previous days as well, we trust the model, we trust the process, we trust the elements and the characteristics. And as we see, price goes for the target. If you were aiming higher, I would personally just 1 to 4 be very content. Risk 100, make 400. But if you were more courageous, you can aim for midpoint of this gap, which is over here, aiming for Tuesday 20 o'clock, which is the high of Tuesday's Asia. I'm sorry, it's Tuesday 20, but it's Wednesday's Asia. And that would offer a 1 to 4.9. A 1 point, very straight high up movement. Exit there, don't care what happens, price can freaking move up until here. You don't feel like you missed, I missed another 500 or another 1,000 or another 2,000. Price can literally move up here, maybe can go for all-time high. But we don't want that. We want consecutive profits daily or each 2 days that in the long run compound to a higher position, a higher number, and build good habits that will offer us success in longevity. And as we do see, price from that level actually comes back, probably fills this gap. Does it fill it? Yeah, it does fill the whole gap, and aims for this buy side liquidity over here. It's very interesting. To me, that would be a bit riskier because price usually sometimes only reacts to 50% level, retraces, then fills it. But is it worth the extra one or not even one reward extra? No, I don't think it is. And after that, price just reject. Again, failure swing. Where is it here? Move higher, failure swing, lower. And judging by Ethereum, we want to see if Ethereum had SMT, if Ethereum took buy side and rejected. So different from this. And does it really happen? No, it doesn't. So we have failure swing here as well. So what that tells us, yes, price is moving lower, but we don't have a longer time frame market structure shift. So this could be simply engineered buy side liquidity that will be hunted in the near term future, maybe in the PM session. And price right now is 12. We exited the trade in profit at 11.15. We have made the profits for the day. We have the rest of the day free. We don't stay in the charts stuck in looking for the next opportunity. We simply go out, enjoy the day, and come back in the evening to reevaluate our trade, our analysis, how price moved after, and we will simply just now see how price continues. And yes, price just doesn't. Does it take this buy side? No. Just consolidates in range until Friday opens. Yeah, we will do another video about that. But this is basically how we framed the. Wait, let me see how PM session worked. So what did PM session do? It dropped lower into this New York opening range gap again, into this order block, 5 minute, drops lower, moves higher, changing the state of delivery. So there's a model here as well in the PM session. But since we fulfilled the higher time frame goal over here and we've moved so much already with large expansion, I would be a bit cautious of entering again, because now price can tend to be choppy and kick out as many players as possible. Very strong movement, change the state of delivery, retracement back to this fair value gap, back to this order block. Theoretical entry here. Stop loss below. Take profit above this high, 1 to 3. Maybe I would be aiming for these highs, expecting higher prices. It fails to do so, apparently. Yeah, it would kick us out of the game. But if you were to aim for low hanging fruit, only this high, first initial buy side, 1 to 3 would be easy. I would simply avoid that. And also another characteristic of why we should avoid it is this large movement up, and then this large moving down, and then large moving up. That is a big sign of large players hunting liquidity, hunting sell side, hunting buy side, chopping all sides and taking players' money. So yeah, that will conclude the Thursday's price action. I did take some smaller snippets of price movements, but I thought let me do a video that concludes this in a nutshell. And yeah, this is pretty much it. So where we frame the trade is from the higher time frame, coming from the daily. We have a weekly bullish reaction. So again, we have reaction to fair value gap, sell side taking, change the state of delivery, coming back to this bullish order block. So we expect this week to remain bullish. So we have all signs of bullishness. We have engineered liquidity being waiting to get swept. We have higher time frame supporting opening range gap. We have internal manipulation, change the state of delivery, support here, movement higher. So another element is, even though we see price being supported here and reacting from these levels, we don't have to enter here. We don't have to risk it here. We can expect for more confirmation. You can technically, but you would be waiting a long time and be suffering a lot of movements. So you want more confirmation, as we do here with this movement, coming back again to this gap, being respected here, this gap over here. Maybe we can also frame it in the sense of premium and discount below 50%. Does it drop to discount? It does. Price is cheaper now for the banks. They buy it, moves higher. So we can use this as a framework and as pinpoints to base our analysis on and our directional buys, while entry can be done here, can be done here, can be done up here as well, as we did, and still offer a great potential risk to reward ratio as a 1-4 or 1-5 if you aimed for the higher gap fill. So this is basically Thursday. Very nice setup. If we were to be trading Asia and London, we would experience very harsh conditions. And sometimes it's best to wait, be patient, control the emotions. That was the biggest lesson, in my opinion, in this movement up here. Just trust your analysis, stay grounded to your previous analysis. Don't lose yourself at this moment right here simply because it moved so high in our favor. We missed the entry. So let me just enter here. Imagine entering here, aiming for high, and having this big stop loss. It's just fucked up. It's almost 2%. Sorry for the language, but it is. So it's a very, very big lesson to control the emotions as it's coming down with velocity here, as it finds support here. Entering here with needs a lot of courage, a lot of balls. If you want some more, safer option, this entry here was very optimal. So this is for today. We'll see each other in the next video, concluding Friday's price action and the weekly recap. Peace out. Yeah.